This strategy made me $10,900 in a single morning while traveling Europe, without indicators, any fancy signals, or just random guessing. I used just pure price action and one simple market structure strategy that I've been using for a decade plus that most traders just completely overlook. So today I'm going to break down for you a 3-step market structure strategy that's so clear that it almost trades for you. 15 years ago when I started trading, I was guessing the direction all the time, trying to time tops, trying to time bottoms, and then making ill-precise entries based on those guesses. I was making the wrong moves and burning out accounts one after another. But one day I realized I already knew if the buyers or sellers were in control because the structure told me everything. And what I did was added just a few simple things to my chart setup that completely illuminated what I was doing. I didn't have to sit there and write some crazy script or Pine scripts or anything like that. I added just 2 things on my chart that would tell me exactly when a stock was trending or not trending, and then from there I could use smaller term time frames to time entries. And so what I started to do was a multi-time frame analysis, but I used 1 and 2 simple indicators on a bigger picture chart to tell me the direction of the trend, and only when that larger term structure would signal me red or green, then I would move down to smaller term time frames to actually time my entries. So when I'm day trading, I take the guessing out of this completely, guys. I use a trend indicator, and that's really simple, and I put it on my bigger picture charts, and when it signals red or green, meaning the trend is either up or down, then I start moving on to smaller term charts, and I start to really precisely narrow down my entries. So here's what you need to do. First, you need to set up your chart so that you can always look at daily charts. That's where I gain the structure of my ideas. I use the daily charts for big picture idea generation. I don't take intraday trades unless I love the daily chart. That tells me what I want to do. Then I'll use an hourly chart to nail down the trends. If I'm trying to time a bounce, I don't try to get the bottom of a bounce. I don't try to bottom tick anything. What I do is wait for my trend indicator on the hourly chart to flip from red to green in the shaded area that I'm gonna show you. And then I use my 5-minute charts to do intraday patterns. Many of you guys are familiar with them. I'm an inventor of most of them. The ORB, quick pullback buy, so on and so forth. And that's how I structure my trade. So it's a 3-step market structure strategy. Big picture, your daily chart. 1-hour charts to identify the trends when the trend is turning for the top or the bottom, and then a simple 5-minute chart to nail down these entries. So guys, let's move down to the charts. I'm gonna show you a couple examples of trades that we've been taking in our chat room on a daily basis and just shredding it this year, and let's get to work. All right. Let's go over a trade in Circle that I had been stalking for days and days. Everybody and the twatter and social media were trying to catch the top of this. Now look, we were trading the trend to the upside, but at some point you get what's called a rubber band short. A rubber band short is when you get a stock that's just so extended, right? It's just so extended to the upside, that at some point you've got to come in and take this thing down. It's for purposes of honor. So if you look at this bad boy, you have the breakout here, and then you get up 1, 2, 3, 4, 5, 6 days. But the main thing is, look, it goes up hundreds of percent, right? From the IPO price, and even from this breakout, it's up more than a double. And so this is like your classic rubber band trade where, you have a large cap name, it's a $40 billion company, and it goes parabolic. So now what is happening is that everybody is trying to catch the top here. And I'm sure there's some awesome trade there, but that's not really my thing because it doesn't fit the structure of what I'm trying to do. So what I'm trying to do is make sure that I time the turn in terms of the trend. I don't have to catch the top because I just need to catch the meat of the move, right? So what we're using here is an hourly chart. So as long as, see this green shaded area, the bone zone? As long as the green shaded area, and this is the breakout here, right? As long as the green shaded area is green and it's opened up real wide, right? See how it's just like opened up real wide. As long as this is green, I'm not trying to time the short because a lot of times what'll happen is like you'll pull back and then you'll bounce. And like these like bounces, like see like it pulls back here, gets to 240. And then the next candle in the hourly gets to 280. That's too big of a range because the trend is still up even though it's cracked, right? I'm not trying to time this top. It's fun like to just advertise like, hey, I timed the top, but it's not really like something that's a low risk, high opportunity play, right? So what I'm doing is just waiting. So like you can see here, like it just pops and then goes, right? And you're just kind of going back and forth on this bad boy. Now, the key is this, right? Like as it's just kind of back and forth, and it is like, you can see like it's just testing a level and all this kind of stuff. But like the green shaded area, right? Your trend on your hourly chart is green. So I ain't touching it, right? I'm not touching it because I could just rip tits. Now look, obviously it would be hard to rip tits, but hey, I also thought that at 200, 240, 300, right? Like you never really know how high these things can go, especially with the new options activity or the way options activity has been working lately. The squeezes are going a lot higher than you think. So you got to leave it alone. So now as this starts to, see how the 9 starts to break under the 20? When this happens, your shaded area, right, your bone zone is going to flip red. That's when I'm looking to potentially take this thing short. As soon as that 9 starts to flip under the 20, now I'm looking to potentially take something short. So while this is happening, as this starts to flip here, right, I'm looking at my 5-minute chart for some type of pattern. And what I want to do is just stay out of the chop, right? And so what you start to see is like, right, like just this big test at 245, 245, 245. Like it's just a nonstop test, right? And this is where the fun happens in trading. So you built out a level here. Now what we need to do is just wait for the opportunity. You don't want to preempt it. So like, see how like you tested here, but at this point, you still haven't even flipped this, right? Like this is still in the green, like it's testing it, but it hasn't flipped it yet. So I need to confirm on the hourly that the trend is shifted. And then on the 5-minute, I need to nail this thing down. So as soon as this thing breaks down on the 5-minute chart, now I'm alerting it and entering it. I use puts on this. They didn't go up as much as I thought because the IV was super high, but like I did the 230 puts and we started entering the 230 puts at 1450, right as the 245 area is breaking down. So I don't got to do anything too crazy. Like I'm slamming this thing as soon as it breaks down. I get 1450 fill. And then my thing was like, you know, if it like kind of meandered a little bit, I was going to add some more. And then now we just start to scale out. So 1750, I start to scale out. 19, and then the rest I hold overnight as it starts to push down. So as this red shaded area starts to open down, right now what you start to see is like every pop on the 5-minute chart also starts to open down. And then what I do is I hold it to overnight, just the lotto. So remember, so I scaled out of some of these because you got to take profit. So I took some off at 1750, some at 1970. Then I hold the rest overnight. And the reason is I want to go for that bigger trade. So you never want to turn day trades into swing trades. But if you have lottos, like this is just my last 1/4, then what you can do is swing those and you put a flat stop on it. Meaning if your entry is at 1450, then you put a stop loss at 1450. You can hold a quarter of it overnight. Because at that point, even if you get wrecked on that last quarter, you're at worst, maybe you break even, but you'll probably still be in the profits, right? And now what's going to happen is like you're into this trade. And what I want to do is like start adding into it, like if you get pops and stuff like that, right? So like you'll start to see now that the trend is down on this, even when you get these momentarily bounces, what'll start to happen is like they won't hold, right? Because the trend has shifted. So now what happens when the trend is higher, like see when the trend is higher like this? When the trend is higher like this and you get these morning spikes, they'll pull back and the structure will be like this. They'll just keep trending higher and higher because that's what the structure is. But what happens is as the structure starts to change to the downside, now like you get these pops. These are just fugazis. People are going to chase them because they have the FOMO of missing this, right? When the shaded area was green and the trend was hot. So they want to relive those days. But those days are over, right? That was a one shot, one kill. The days are over. The trend is flipped down. And so now what's going to happen is like you get these pops, people chase them and it just gets rugged. The short sellers come in. Then you pop up and people try to be breaking this out. But look, it's just a lower high, right? You start to see a lower high. And now you can kind of keep shorting this thing down. And so you can now keep day trading this literally to the downside as you start to get intraday setups. So now the trend is shifted to the downside. So like you see something like this in the past, maybe it's a breakout, but it's not because the bone zone is red. And so what happens is it just ends up being a double top. See, the difference between breakout and double top, triple top is the main structure. If the structure of the stock is trending higher on the big picture and the intermediate term picture, which is your hourly, then that changes everything. Now all of a sudden resistance resists. But if the structure is opened up and the trend is really hot, guess what? Resistance is just areas you buy to break out. So a lot of times people get confused, like it's a breakout or is it resistance? No. It's breakout or resistance on the small term time frame is just dependent on what's happening on those bigger picture ones in the intermediate. So now look, the next day, see like you spike up again. But these spikes are just fugazi. See this? Lower highs, right? Lower high, right? From here. This is not going to happen, right? And then now the bone zone, even on the smaller term picture, is red. You want to keep shorting this, guys. What you don't want to do is the one trick pony where like, you enter the big setup in the beginning and think that's the hot setup. It's really the subsequent stuff when it's actually confirmed to roll over that becomes so important to the downside. So you want to be just mindful of this. And now look, see now on the hourly, like the bone zone has shifted from red to just really nothing, right? It's just flat. So what you're starting to see on the 5-minute chart is a lot of fake outs. See all this chop here? So now what you'll see is as the bone zone has flattened out on that intermediate term picture, right? Now you're just going to get chopped. So like you're not getting anything because this is flattened out. So like a lot of people are trying to long this right now and some people are trying to short it, but it's a leave alone, right? This is where you can lose the most money. It's not anything. It's a leave alone. So you get this thing, it's popping up, popping down, popping up, but the bone zone is flat. You can't even see it, right? So now what you're getting on an intraday basis is just like all this fugazis where you're like, is it a long? Is it a short? Can I trust the pop? Can I not trust the pop? You don't really know. Now let's look at this to the long side. So this SEDG is something I've been literally stalking since it started pulling back from $400. So this was like the hottest stock around in 2022, 2021 in the COVID days. And it's just been in a nonstop, downtrend parade. And there's been so many times where I'm like, oh man, maybe this is it. This is the bottom. This is the bottom. We don't need to guess the bottom, all right? Made this mistake too many times. We don't need to guess the bottom. What we need to do is respect the structure, right? So you can see here, it's just all chop, right? This is the daily chart. So when the daily chart's all chop, like, you don't want to get anything. All of a sudden, the volume starts to pick up and you had this like last gasp flush out. So there's like a sell the news play. So there was when the House and the Senate and the big beautiful bill had announced they're cutting like, right, all like all the credits for solar and EV and stuff like that. That's actually a good thing for the stocks, right? Because it's a sell the news event. Everybody already knew it's going to happen. The stocks have been going down forever. So actually it's a fugazi. The bad news becomes good news. And so you get this huge gap down. And so this is called a gap down reversal play on the daily chart. We do this all the time. So you get the gap down, and what you're looking for is like the first consolidation, and then you're trying to hit it to the upside, all right? Now, you don't do this on everything. It's only on the specific sell the news type of event where like everybody that knows something's a turd is a turd, and then it does some turd news, and you're like, okay, yeah, we already knew that. That's usually the fugazi. Like we see this all the time in like really hot stocks. They'll like gap down, right? And then they completely reverse because they're just so hot. And this is the opposite. This is not hot. But at some point, everybody knows that this thing is just a big gelatinous piece of excrement. So when the news that everybody's expecting happens, right, it gaps down, and this thing gaps down a lot. It's like freaking 50%, right? That's the last wipeout, right? Climactic volume. So if you look here, there's a climactic volume. The biggest volume day maybe ever on this, right? When you have the biggest volume sell day on a stock, that's actually not bearish if it's at the end of a downtrend. It's actually bullish if you have a subsequent move in the structure. So like you don't buy it, you wait for the structure. And so what I'm doing is I'm waiting here, right? Now look, while we're doing this, I'm looking at the hourly chart. So like, see here, like when the news comes out, you bust down and you just fart around and see like the bone zone is real thin here. So like you see it flips green for a second. That doesn't count. Like you can't even tell, right? You need the thing to open up, right? Open up. So now this bad boy opens up here, right? Now it doesn't mean you add it necessarily right away when it opens up. That's your signal. Okay, on an intermediate term time frame, the trend has flipped, right? Because you'll see it on the intermediate term time frame before you see it anywhere else. So the trend has flipped. And so now you use your smaller term charts to start to load into something. And so when that trend flips at 17, now you can start to look and you can use all your intraday patterns to enter. So now when the bone zone flips here at 16, 17, now you can do your intraday patterns that you've been learning from me in every single one of these videos. What have we just been talking about? The moving average pullback, right? Look at the last video on Circle, right? When it was going to the upside. We were talking about buying pullbacks to the bone zone. So all of a sudden, what do you get? You get a pop up, you get a pull back into the bone zone, you get an entry, right? You get a pop up, you get a pull back to the bone zone, you get an entry. And so now you're going to start getting entries on this thing, right? You pop up, you pull back into the VWAP, right? You get a pop up, right? And so now you can start using my whole playbook of stocks trades that I've been teaching you guys for literally the last decade. And since 2008, check my old Bulls on Wall Street YouTube channel. I posted 1,500 videos on that thing. I've been teaching a handful of these patterns. They've been working since 2008. I've literally taught over 7,000 students my style of momentum trading. But this 3-step market structure strategy, this is the whole ball game because it's taking my 20 years of knowledge and narrowing it down into something so easy and simple that it almost trades for you. Look, the amateurs will always enter on some breakout or like some random moving average, but the pros wait till the structure flips. When the structure flips, all of a sudden you go from bearish to bullish or vice versa. Now every pullback and every pattern works. An intraday pattern without structure is meaningless. Like if I just do an intraday pattern, right? I do an ORB or quick pullback buy, and I do it in a bullish way, but the structure of the stock is down and bearish, that pattern will fail a majority of the time. So what you need to be always doing is first look at structure, then look at pattern. So you go daily chart, intermediate chart, 5-minute chart. You got the full system now. Identify, break, confirm. right? Big picture, intermediate picture, 5-minute chart, the holy trifecta of threes. But to really master it, right, you need to make sure that you are aligning these on all time frames. That's the key. If you're just trading one time frame, whether you're swing trader, day trader, short-term, intermediate-term trader, position trader, it doesn't really matter. These are just words. Any type of these traders still need the three structures to get going. If you're an investor, you're just changing the candles. You're going monthly to weekly to daily. If you're a swing trader, right, you're going from weekly to daily to hourly. And if you're a day trader, right, you're going daily, hourly, 5-minute. That's the whole ball game. There's not some super secret thing like investors know more than day traders and vice versa. We're all looking at the same stuff. The key is really just making sure that you're following the rules for your specific time frames that you're trying to do. Most traders don't fail because of entries. They fail because they don't trust what they built. This strategy de-risks decision making. When the structure shifts, you're no longer predicting. You're reacting. When the bone zone holds, you're not hoping, you're confirming. There's a big difference. So what you want to do is wait for that multi-time frame alignment and make sure that you're not anxious because you're guessing for the breakout or some pullback. You're actually focused and you're confirmed, and you don't have to do anything, right? Wait for that hourly bone zone to flip from red to green or from green to red. And then you look at the 5-minute charts. We can all make this so damn complicated, but it doesn't have to be. We have some simple stuff we can do. It's just identify, then wait for the bone zone flip to go, and then use a 5-minute chart to pull the trigger and use an ORB, quick pullback buy, or any of the setups that I teach in my 60-day bootcamp class that I've made hundreds of videos on YouTube about. If this was helpful and you're ready to take your trading to a whole new level, book a call with the Bulls on Wall Street team. We've helped over 7,000 traders since 2008. And we're not here to just sell you some bullshit. I'm not some 22-year-old with some Lambo and braces telling you to do this. I've been literally making YouTube videos for almost 2 decades. No upsells. I just do real coaching, real structure, and a real path to consistency. Some of the best traders in the industry have come through this program. You've seen this strategy. Now imagine mastering this live with our team every single morning. Guys, hit the link below. Let's see where you're at and what's holding you back and how we can fix it. I'll see you on the inside.